Hello guys, this is Wilanji. Welcome to our YouTube channel. So in today's video, we're going to talk about how to make money out of it consistently. So in today's video, we'll dive in deeper on how we can make money consistently in our 20s. So one of the ways in which we can make money in our 20s is through passive income. So passive income, this is basically income that requires minimum labor to earn it. Then there are some examples, of passive income. So some of them, there's rental properties, there's stocks, day trading, affiliate marketing, digital marketing, and a lot of examples out there. Yeah. So in today's video, we're going to talk about day trading, which is in which many are going to focus on forex trading. So yes, so forex trading is something that has come up. A lot of people are engaging in trading, but don't really have proper understanding on what it is. So forex trading, this is a buying and selling of currency pairs. So an example of the currency pair is Euro USD, Euro CAD, etc., etc., etc. Yeah. So forex is actually foreign exchange trading. So if you've seen, if for example you are going to a different country, you are moving from Zambia to South Africa. When you're in South Africa, you won't need your kwacha. You will have to convert the kwacha to that. So that whole exchange, that's a forex trading exchange. Yes. So now, forex on our part, we are also taking part in the exchange. That's how we're making money through the same forex trade. So now, forex trading on our side as traders, as retail traders, it's a decentralized market where world's currencies exchange hands. Yes. So that's a basic definition of forex. So forex has a lot of assets that are involved in. So one of them, obviously, it's currencies. There are stocks, there are CFDs, and other things. Yes. So yeah, not really stocks, because forex stocks are something else. Yes. So our main focus is going to be on synthetic indices. So synthetic indices are not currency pairs. They are not currencies. So what are synthetic indices? So synthetic indices, these are unique indices that mimic world market movements, but with a twist. They are not affected by real world events. These indices are based on cryptographically secure random number generator that audits that's audit that's audited by independent third party to ensure that they cannot be manipulated or tampered. So these are like currencies. These synthetic indices, they are like currencies, but for them, they are not affected by real news. So an example is when um when there's when for example, if Joe Biden today was to say something that maybe comment something that can give the dollar a negative effect on the currency. All synthetic indices won't be affected by that because for them they are just independent. They do not move with news. They are just auto-generated numbers. So yeah. So which broker offers synthetic indices? So before we actually dive into a broker which diving into a synthetic index, we have to understand what is a broker. So a broker is an individual or company that buys or and sells orders according to the trader's decision. Brokers earn money by charging a commission or fee for their services. So a broker is actually an organization, you can put it as an organization or company or firm that is responsible, that's helping us, execute trades. Yes. So what happens is they are like the middleman between the liquidity provider and us. So them, they're in between providing liquidity to us for us to trade. So these people are the ones that are responsible for all these executions. So far, there's only one broker which offers synthetic indices, and that broker is Gary, which was formerly known as Binary. Yeah, Binary. So we'll dive in deeper later on how we can set up a trading account and all. So what are the advantages of trading synthetic indices? So you do not need a lot of capital for you to start trading synthetic indices. You discover that the actually minimum amount of money that you need for you to start is just about $10, which in our currency must be about 182 kwacha, if not mistaken. Yeah. So you do not need a lot of money for you to start trading. And this you can trade these indices 24 hours, 24/7, which also includes weekends and uh, weekends and holidays. So if you compare this to currencies you can only trade them from Monday to Friday. So now you can see the advantage that you have over currencies, where you can literally trade at any time. At any time, whether weekend or weekdays, you can still make money. Yeah. So, and the other advantage is there are different levels of volatility. So volatility 10, there's volatility 10, 25, 50, 75, and 100. So yeah, these are some of the examples of synthetic indices. So there's volatility 10, volatility 25, there's volatility 75, 50, 100, boom, the boom series, there's the boom 1000, boom 500, and all. And also their jump series, which we're going to dive in deeper as we go on. So in volatility, wait, the volatility 10, the volatility is kept 10%, which is excellent choice for traders who prefer low swings or fluctuation. With the volatility 100, the volatility is maintained at 100%, meaning there are much stronger price swings and no significant price caps. They are continuous indices with deep liquidity. So, like if you can remember in the previous slide, the other slide before the previous one, where we're talking about advantages, which you are not even supposed to start with a lot of money. So if you're to start with the smallest account size, maybe that's $20 or maybe $10, the volatility 10 is going to help you at least open a trade in such a way that even if it was to go in drawdown, you still be at least you remain something you remain with something account. So now our job here is not to make you lose, it's to make you win. So as time goes by, we're going to show you how to make you win. So what you can just do is sit down, relax. Then we'll give you all the information that you are supposed to get. Yes. So then we'll talk about the boom and crash. So a boom and crash is in three series, which are the 1000 series, 5000 series, and also the 300 series. So the most volatile is the 300 series, which is boom 300 and crash 300, followed by boom 1000 and crash 1000. Then the last is which is least volatile is boom 500 and crash 500. So the 300 series was just recently introduced. So before that, the 1000 series is the one which was more volatile than the 500. So there are other characteristics that we will talk about as we go on, which yes, which for boom and crash. So we'll start with boom. Boom, the characteristics of boom. Boom is when boom is buying, it forms big candlesticks, which can be referred as spikes because of their ability to form fast. Yes. So if you're trading boom, boom moves in such a way that as it's buying, as it's going up, it creates spikes. It will just be going up in form of spikes, big candles, big candles. And those you can make money using those big candles. A lot of money can be made just by trading the spikes. Yes. So when boom is selling, it forms smaller candlesticks than the spikes, which are which are more visible on the lower time frames. So as you are seeing those big spikes going up, when it starts selling, it will be forming small candles to the downside, which are smaller than the previous big candles, and it can be visible for you to see all that on lower time. Yes. So when boom is selling, stop losses are never expected. While when it's buying, it is respected. So when it's selling, when it's going in those small candlesticks, if it's if you put a stop loss quite above a certain level, then it spikes. That big candle comes, just forms quick. Your stop loss won't be respected because that's that spike just comes randomly. It's not just, it just comes randomly at a point where if you are not careful, it can blow your account. But as you go on, you are going to know how to trade actually how to trade boom, how to sell boom while it's uh, not blowing account. Yes. So the characteristics of crash is just actually the opposite of boom, where when it's selling, it forms big candles. So the spikes are now on the downside, not on the upside. So meaning the small candles that are visible on a lower time frame are on the buying side, not on the selling side. Yes. So as that also applies, it's also the same for stop loss. When you are selling crash, your stop loss will be respected. While when you are buying crash, when you are buying crash, yeah, the stop loss will be respected. When you are buying crash, the stop loss won't be respected. Then when you are selling crash, the stop loss will be respected. Yes. So basically, these are the characteristics of booming crash. Yes. So now we have to set up a trading account. Uh, so the only broker, like I said, which offers synthetic indices is Derived. So what we're going to do, we're going to set up our trading account. So now we're going to set up our trading account in the next video. So just sit back, relax. Yes, you can just sit back, relax, then we'll help you set up your trading account and you start trading. So as we go on, we'll be able to teach you on how to open a trading account. Actually, in the next video, we're going to show you how to open a trading account, how to set it up, how to deposit your money, how to link your trading account to your MetaTrader 5, which you can use, which you can also download on your phone, your tablet, and your other gadgets. So thank you for staying this long on our channel. We ask you to subscribe, like this video, and also share this video to anyone who's interested in making money in their 20s. So if you want to join our Telegram group, you can join our Telegram group in the description below, where every information is going to be put. We'll be sharing books. We'll be sharing everything that's going to be useful for you to grow. And as we're growing, it's not just about trading. We'll also be touching you psychologically so that you can face anything that comes your way psychologically. Like just like what a saying by Warren Buffett, which says, if you cannot control emotions, you cannot control money. So it will help you become emotionally tough so that you can face the market without emotions. Thank you for watching our video.